Welcome back, everybody. Great to have you here for Markets and Sectors. My name is Mike Fairbourn. Folks, a lot to look at today. We've seen markets run up to prior highs. We've seen them flatten out and kind of dip a little bit. How big of a dip is the market going to make here? Do we have any support or other areas that we can be looking at specifically? We're going to tap into that today. I look forward to it amongst a number of different indicators as we get into this. Hello to everyone here. I'm joining the chat by my good friend Ben Watson. Folks, any questions, comments, throw those into the chat. Look forward to trying to address each of those with you as we go through. I do need Ben's help for that. Obviously, does a great job, and it's nice to have him here. A 20, 30-year vet in the markets. Hello to you, Greg. We've got Riceberg, Kevin, Matt, Frank, Kelly, Robert Boucher. We've got others here. Good to have you here. And no, Robert was out for a little bit. Great to have him back, as well as Scott Naresh, Will, Maligator, BJ, and others. Morale. Too, folks, let's get started here. A lot to look at, and interesting to see some of the components in the market that are pushing forces, kind of like a tug of war between the bulls and the bears at this point right now. Who will win? What does volume say? We're going to tap into that for sure. Let's hit some disclosures to get started, though, real quick. So, information provided here is for general information purposes only. It should not be considered an individualized recommendation or personalized investment advice. The paper money software application is for educational purposes only. Investing does involve risk, including loss of principal. As we do tap into futures within this class, I did just want to note here to the Charles Schwab Futures and Forex LLC and CFTC registered futures commission merchant and NFA Forex dealer member. Now, futures and futures options trading does involve substantial risk. It's not suitable for all investors. Final slide here, just to quickly note that past performance is no guarantee of future results or success. And there it is. There is the market right there. So let's broadly look at the market initially and actually tap into some volume indications. And then what we'll do is we'll hit our indicators, which are very interesting as they stand right now as well. Getting into it, first of all, looking at the markets. First of all, big picture trend. Is the trend still intact? Well, higher highs and higher lows. We have seen a higher low over here. So big picture, always important to consider. What is the direction of the underlying trend and maybe even the longer term trend to gather and garner, sort of a sense of market conditions, folks? This rally that we had up off these lows, what did we get? Really kind of a sideways channel. Now that does look similar to a flag pattern, right, that we get at the top. The interesting thing is it is coming at right near resistance. We didn't quite get above resistance, and that's okay. But what becomes very, very interesting here is we look at this on a more minute sort of a scale, is we look at that flag and we look at the range of the flag. And an area that we could really be keeping eyes on right now each and every day for short-term directional movement. You take the highs and you take the lows. We bounced off the low or yesterday's low, and I think this is an important level. There was a gap that just slipped right in there. We're trying to explore this particular range right there, and that's kind of our flag. Now, if we start to dip below this level, it's a little bit more on the bearish side, is it not, short term? We want to actually hold in this range and ultimately extend out in the direction of the bullish, towards the upside. But this is kind of defined as a level that we got eyes on right here. And we're kind of keeping a sense of, hey, where might support be on something like this as well? I'm going to go ahead and just throw on a moving average. Here's the 50. Now, the 50 has pretty much been spot on at this level, and that's a pretty big level to keep an eye on. In fact, the 50, as you can see over here, has also kind of matched in with the bottom of that gap. We gapped above the 50, we gapped below the 50, and here we are again right at that 50-period moving average. So keeping in mind that range that we looked at for the possible flag itself, I'm talking the parallel range, that rectangle right there of the flag itself. We're still holding in that level pretty nicely, and there's a pretty good bounce back here. Now, I'm going to dive in one layer deeper, and that is this. This could be a piercing pattern to the upside, but to get a piercing pattern, we have to get above the 50% level really of the body of that candle. We could look at the total range, but oftentimes it's the body of the candle. What I'll tell you what, let's do this. We're going to look at the range initially, and I'll point this out to you. So what are the odds of us getting above and moving up higher? Well, we've got to probably clear the 50% level, clearly, first of all, high to low. That blue line right in the center there is our 50% level. How close are we to getting above that level? Kind of maybe keep an eye on this range within the market. It represents the 50% of our big bar to the downside here. And that is going to be right at about 56, let's see, 50, 55, 65 or so, right in that level. 55, 65 on the S&P 500 index. So getting above that level, there could be more of an indication, the possibility of us extending up higher here with that flag pattern, possibly unfolding and testing these higher levels here. Now, an important note, and we actually have to flip this over into the ES for now. I do have painted on here in the backdrop here for us the volume profile. Very interesting as we look at volume profile. We have to tap into the ES here, the S&P 500 futures, to actually see that volume. And a couple of things I want to highlight for you. So we're looking at volume profile. We're comparing that volume really on a horizontal instead of a vertical basis, right? And we're seeing where the trades came in at. Now, that's volume over the past 1 year. I'm going to zoom in on this so we get kind of a better feel of the chart. And that's all we need for now, okay? Because really this upward range really was, we're starting from really March going forward, and we're looking at the numbers very, in a good position here. Okay. So again, if we are at these spike levels, they refer to these as volume nodes. If we are at a volume node, and you can see that there is a major spike right there. The ones I'm concerned about right now is this spike, and of course, the point of control. Point of control is our red line right in the middle. This purple area, the shaded purple area, represents the top 10% of volume of trades that we've seen in the general market. We can see where that's coming in at right down here. More on that in just a second. This second major spike right here, and we have a little bit of a range right there, a little bit below, but if I draw a line right through there, look where we're at. We're at this level. Now, what I love about the volume profile is it draws our attention to what we're seeing. And by the way, that mirrors right on top of the 50-period moving average, actually painting on top of it. If I continue to draw this over here, look what you've got. It's kind of hard to see here, but we were sideways there for 3 weeks. 3 weeks in a sideways range, and that really added to a lot of the volume that we're seeing here. What's nice about the volume profile is it helps you to kind of look over here in the past and spot and say, well, yeah, that's a support level. Maybe something we wouldn't have seen before, but it's acting as a very interesting support level. I'm going to clear it off right now so you can see it. Okay. Yesterday, we fell right to that point, which happened to be the second highest volume profile in the range that we're at. So if we can hold above that volume, it acts as support. It's acting as support right now as we speak. Anytime you get these dips, key point. This was a really, really sharp dip in volume right there. I'm just trying to highlight that. That means weakness in terms of volume, and prices tend to fall very, very quickly if they break that level. I think we're at a very interesting point here at the 50-period moving average, because if we start to break below here, let's say, for example, we close below today's low, or this hammer pattern does not hold up, we may slip fairly quickly through this range right here, is what the volume profile is telling us. There's kind of a gap in volume. I kind of see it as sort of like turbulence flying an airplane. There's just less air there, so to speak, and that's where you get the turbulence when you run into it. And the plane tends to do what? It can drop 10 meters, 20 meters like that. And we just don't have that. In other words, there was just not a lot of buyers and sellers through this range, and we could dip. Now, if we dip, where's the next level we fall to? We start to, I'll clear this off one more time, and I'm going to highlight this with a blue marker here. The volume profile really starts to spike right here before we hit the point of control. But I would call all of this a major spike. So let's use that top end of that range right there and just go horizontal from there, and I'll show you. what we do is we run into yet another key area that might be acting as support. Support, we are above it. It was resistance. The corollary to resistance is support. We're above it. That's support. Support could come in right at that level. Okay, what we're looking at right there. And I'm going to quickly draw this so you get a sense of where that's coming in at. But that's about 50, it's about 53.30, right in that range, 53.30. Okay, and then we have greater support right here, right in this range right there. And you'll notice those are our lows. That actually represents the point of control, the highest volume over the past entire 1 year. And you can see over there, you get support here as well. Okay, now with that, one last moving average I want to add in to kind of paint an additional picture of what we're seeing here, and that's the longer term moving average. The importance of getting this down could be very, very interesting. The 200-day, which we know a lot of technicians will look at, and a lot of institutions will look at it, they've mentioned, for indications of bull market or bear market. It's coming up right now to support the volume profile right there. So volume profile in line with the 200-day below, if in fact we do get up there. I'm talking the point of control volume profile and the last major low. Okay, so that's kind of what we're looking at right there in terms of volume profile. So really some key areas to be looking at. So just to summarize, we're at support, and the next level of resistance, because we're below it, could be right up top here at this next volume node. Of course, we could break out higher, and that could be, there's no volume up here, and so we could see a breakout. If we can get above that upper range, if we dip here, we could slide very, very quickly, possibly down to the next level, which was a little bit higher than the lows. In fact, it matches these prior support levels. So keep a watch on that. Of course, we have the 200-day coming up in here as well to kind of offer a little bit of support too. Okay. All right, I'm going to pop this back to the S&P 500 index. Actually, one last thing I want to do while we're at it, I want to look at volume, one more aspect of volume, and that's going to be the unbalanced volume. But we're going to do it on the ES. And so what I can do, I don't want to add too many in here. Let's go ahead and do this. I'm going to go down to my market forecast. We'll look at this in just a second. And I'm going to add in here on this chart, I'm going to maximize the sell. It's not going to be GC. It's going to be ES. We have to have volume, right? And futures do have volume, and we're using this as a comparable to the S&P 500 index. Some, you can, although we can't use ETFs in this class, there's an ETF that could be used for the S&P 500. Folks, you could use that individually. I just can't use it in this class. So let's go ahead and add in on-balance volume here and see if it gives us even more insight as to what's going on with this section. We'll just make this a little bit thicker, and we'll turn it into black, and that might be too thick. We'll go to 2. Okay, so there we go. And what on-balance volume is telling us now. Okay, so on-balance volume is pretty much in line with the trend. Remember what on-balance volume does. It adds upward moves. If you closed higher, it takes this volume. Sorry, I'm just trying to point out a bar here that moved up. I guess I could take that off there. Yeah, okay. So I'm going to try to draw this straight down. Okay, so as close as I can. I'm taking a look at a bar here. That bar was up on the day. That bar is added. All the volume is added to on-balance volume. It makes sense when you kind of spread this out. Sorry, I'm pointing to a different one. It's down here. But there you go. You can see it kind of jumping up here too. And as long as you're closing up, it adds that volume up. It takes it down when you're going down. So we look at divergences here, positive or negative. One thing I'll say that is in line with the trend. Notice this prior high right there, we broke above it. If I take a look at this general range right there, did we clear that high there? We did. So prices cleared the high, volume, on-balance volume cleared the high. Something else happened, which was kind of actually unique. We had a really interesting spike of 3 days of volume right there, or 2 days, and that shot the on-balance volume indicator higher. Now, all else equal, that's a positive. That can be a leading indicator, right? We shot up. Prices didn't break a high. They went flat. But on-balance volume, on a very minute scale, broke higher. And even though we're lower, we're at a higher low on on-balance volume. it's interesting. There might be buyers that are trying to come in and buy on that dip. That's going to be an interesting thing to kind of consider going forward. But that's a kind of a take on volume. I wanted to hit volume and moving averages and kind of go from there. Okay, back to our charts. Let me see if we have any questions or comments coming through at this point in time. You have hopefully a better sense of volume here of what to see in terms of some of the great indicators that we have right here on the Thinkorswim platform. Volume profile, on balance volume could be interesting as well at these support levels, and they can give us a really good idea. They can help to anchor at prior support levels and kind of reconfirm or confirm support or resistance at different points and what might be expected if you dip below this level, for example. So let's be watching to see if we can get above that 50% level and close. It doesn't have to be today, but ultimately, can we trend above there? That could make the flag scenario, or at least a test of a higher level that we saw through this range, breaking above 50% of that bar, which actually is right off these lows. Just generally, from a trader's perspective, they might consider that more probable of a run to the upside. Okay, so hopefully some things to keep an eye on. All right, well, excellent. Let's do this. Let's dive in now into seeing what some of our indicators show us. Now, last week is actually before last week, but we did dip below the 70 on our McClellan oscillator. So we got above 100. Remember the read there is if you get below 70. We did not get below 70 right here. Let's zoom in to kind of show this to you. But right here, there is a dip. If you point to it, it tells you where we're at. In fact, it says it right there. It was at 62. So if we went below 70, we got above 100, and then we went below 70, the way that McClellan has designed this, or spoke to it specifically, it starts at that point in time. So at this bar, McClellan says 2 to 3 weeks, sideways or down. Let's see, let me give you a read on 2 to 3 weeks. Where are we at on that number? I'm going to use this diagonal line to kind of give us a sense of this, but I'm pointing at it right here. Can't see the bars. I guess we can now. So there is 9 bars. So 2 weeks is right there. 2 weeks is tomorrow. I'm talking about bars as in calendar days. 3 weeks is about, you're getting close to mid-September range. So mid-September. Okay, right there. So that's kind of the dip range. And we've seen a pretty good record of McClellan getting above a -70 and running 2 to 3 weeks. Breaking below a -70 here and dipping about 2 to 3 weeks, generally on the 3-week side. Now, it can go longer, but that's generally just what he had mentioned. And the markets have been interesting, kind of interesting to see follow that so frequently over the past few months. McClellan summation. So we're getting a sum here. What we're looking at here is the direction of the line. And right now, it's just sideways. We did clear this prior high. I think these levels of higher highs and higher lows can be very, very interesting too on the summation index. Still gaining ground. The trend is still up. We flattened out a little bit with prices, but a 1-day down bar hasn't done anything really to budge the summation index to the downside. We've just flattened out. So not really a negative there at all. In fact, that's a positive indication. Turning to our advanced decline line, as we have set up here, this jump in the market, remember, we're looking at that flag pattern right there. The top of that flag, we actually did get more advancers than decliners in terms of that trend. So that is clearly a positive right there. More advancers relative to decliners, thinking in terms of breadth. We did dip lower. It kind of looks like, although they are two completely different reads on the market, it does look a little bit like the on-balance volume. We broke out of the range. That's a positive, and we have not made a new low there. Notice over here, we made a new low in price, short-term low, but up top, this is a higher low. So breadth is a real positive in terms of what we got there. Now, turning to our next level and looking at an equal weight of the S&P 500 index, clearly a positive as well. Notice over here, the S&P 500 index did not take out new highs. There's the high point right there. Let's zoom in to kind of just show that a little bit more. There's your high. We did not clear the high. When we equal weight, the S&P 500 index, we hit a new high. Think about breadth potentially pushing markets higher. Taking a look at our watch list over here, let's go to our visualize tab on the S&P 500 index. So we've gotten really, the breadth. If you're considering each of these boxes to be equal sized, we might have something, a real moderate sized box that would fill in everything. The ones that really do push the markets are these larger, higher capitalization companies, NVIDIA, Microsoft, Apple, for example, Google, and Meta. If you equal weight it, we're getting participation better across the board, and you can see that in making new highs. So that too is a positive. Not seeing much weakness there at all. The RSI, if we kind of take a look at the RSI itself, we did, we rallied higher. It's pulled back a little bit, which would be expected here. We are still holding clearly above 50. So normally if you're above 50 on the RSI, that is a bullish indication. We'll put a line right between the two, folks. There's our 60 and there's our 40. Boom, there you go, right in the middle. All right, so I've been kind of rambling on for the first several minutes here looking at it, but we've painted a picture. We've got some indications of strength. We've got a flag pattern that is not yet broken down, maybe supported by volume. Advancers, decliners. More broadly speaking, the breadth looks good. Breadth of the market, more participation in the market. Let's look into that a little bit more detail here in just a second. But hey, that is a new high. At the end of the day, I don't know. In my book, folks, yeah. And in your book, it should be in everybody's book, but that is a new high right there. Yeah, we're clearing that level. And so that is interesting to see. We're getting that participation. The NYA, the NASDAQ Composite Index, a much bigger basket of companies, right, is in that same area as well. McClellan Oscillator, we've ticked down a little bit, but just slightly coming down here. There's not the downward trend is there, but we've actually recently just kind of been going a little bit sideways. Summation Index still going higher, okay, on this large basket, but think in terms of the bigger basket of companies out there, participation. We're seeing that out there. We're seeing the NYSE Composite actually making new highs as well. That trend looks stronger to me than the S&P 500. Remember, the S&P 500 is really filled with a lot of growth companies too. That's how companies are added. It's way overweighted in terms of growth, the S&P 500 index. So not only does it have the weighting, but it's weighted towards growth. You might get other aspects of value. So even though we might see the S&P 500 weakening, those companies that might have other components, income value that might be part of the NYSE, well, they're starting to move right now. So, all right, that's what we've got. Now let's take a look at the Hindenburg Omen and make a comparison here. Now remember, Lee would always do this on a 3-year weekly chart to give us a sense if we're getting into these Omen spikes. Remember, the Omen spike comes when you're getting a fairly large number of new highs and new lows. And so there's kind of a fracture in the market. When there's a fracture in the market, there tends to be weakness that can follow downside runs. And we saw that over here. We've pointed this out the last couple of weeks just to get us our bearings straight. But whenever there's a downtrend plus a number of these spikes coming up, we're getting that divergence between a number of new highs and a number of 52-week new highs and 52-week new lows happening in the market. The fracturing, that's where you can start to see that continuation of the downward trend and actually, maybe some sharp dips down. Fast forward to where we're at right now. First of all, we saw some of that over here. We had 3 spikes. However, the trend was still making similar highs up on top and higher lows. So look at this. The trend was up, the higher highs and higher lows. So that's one aspect of the Omen that you want to have in your favor. It's either flattening out like we saw over here, similar highs, similar lows, and then you get your spikes, and then you get your breakdown. Okay. But if you get these and you're still trending up, there was the possibility if we were to break here and continue on down with additional spikes that we could have seen weakness. We didn't get that. We saw more breadth increase in the market, not 52-week new lows, but more companies making 52-week new highs, obviously, because the composite, using the composite as an example, or the S&P 500 index equal weighted, folks, they were making new highs. So we're obviously not seeing that in the omen here. So all is clear from that perspective as well. Now, if somebody has asked for this in the past, let me go ahead and just throw this in. If you don't have this script, so let's put it in right now. We're using the standard 2.8, which is the default from the individual who built it originally, but let's do this right now. I'm just going to put it in here and make sure you have that. I'll throw that into the chat. And by the way, this should be shared too for you at the end of, well, at the bottom in the more section under YouTube. If for anybody that's seeing this in the archives, it'll be down there. So there you go. Hello to you, Chris, just joining us. Great to have you here as well as everybody else. Looks like Ben's doing a great job keeping us posted here, keeping us up to date. Any questions, though, feel free to throw those in. I can certainly take a look at those as well. Now, Riceberg, you read my mind as I was going through this. I was actually wanting to skip to the seasonality chart. We're going to hit that because, yes, that standard seasonality sell-off that happens in September. Well, let's take a look at that in just a second. A couple more indications as we get into this right now in terms of breadth. We were looking at this last time we spoke, looking at the NYSE new highs. So the new highs on the NYSE, we said previously we got new highs right there. The NYSE was making higher highs. The blue line is the NYSE, the purple line, but we've broken out new highs. But last week when we looked at this, when we were doing that, or 2 weeks ago, I'm sorry, right there, we didn't have a move at all. So we said, let's compare and see if the spikes really come in. Do we get a substantial number of companies in the NYSE that can make new highs? And we did. There's your spike right there. Just like we saw over here, you want to see that spike coming in. You want to see kind of some leadership in terms of new market highs to potentially keep prices running up higher. Okay, our sell-off, not too unusual. We did get a dip, but really for an additional read on breadth, you want to see the spikes when the NYSE spikes higher as well. Okay, we got to it. All right, I was waiting to get to this as well, but looking at seasonality specifically, it's a very interesting time frame. And by the way, if we've set this up so we're seeing everything yearly for the last 10 years. If you don't want to see everything yearly, what you want to do is just go to the wheel up top, click on the wheel and go to the left-hand side under, let's go to it right over here. We want to go into appearance, and then it's yearly. This is yearly plus the average. We can just go into the average. And so we're just going to make a comparison. We're going to average everything out those last 10 years and just see historically what the market tends to do over this time frame. January over here, you got Jan, and then of course we're just looking at a calendar. December over here. On average, and that's what we're talking about here, on average, what does the S&P 500 do relative to where we're at right now? Now, one thing we can do to kind of equalize this a little bit better, because 10 years ago, a lot of the average prices were down in the 3,200 range. Now we're up in the 5,500 range. We can go up top and click on our gear again. And if we place a comparison here based on the price axis, so we're going to use a percentage scale. Now we're just looking at percentage changes. It makes it a little bit more easier to see. Still basically the same chart, but easier to kind of get a read on what tends to happen this time of the year. Is Riceberg, hey, he was looking at it. He wanted to know. And it was on my mind too, because we're looking at the flag pattern. Seasonality, we had some pluses out there, but seasonality says, what about the dip? Traditionally, historically, on average, will tend to top over here or through this range, but that was kind of the last little spike to the upside, and then we'll tend to dip. And that's right around the 1st of September where we get those highs. Let's put a line up here so we can kind of make this comparison. I'm seeing a spike there as well. So we've got a spike. Do we hold, or is there the kind of the annual normal on average, I should say, on average sell-off? I won't say normal, but It's just sort of the average sell-off that we tend to get down to right now. That's right around the 1st of October. That is a 1-month sell-off that we tend to get. And then this is the upside. We get the traditional, on average, rally towards the end of the year, which is actually tends to be like one of the biggest moves. Just that October, November. Okay, so October, November, and then December to the end of the year. I should say, to the end of the year, and then you revert back over to here to see what generally happens in January is what you tend to do once you get to the end. So we have to park this in the back of our minds that yes, there is a seasonal sell-off here, and we're right in the midst of it. And I think many of you, in my mind, I've seen so many major sell-offs just over the last 25 years. I've seen in the markets that happen in September, October. I'm just thinking that time of the year there just tends to be a sell-off. You see it showing up here, and one of the reasons why we can kind of recognize that is just the steepness of it. In other words, there's been some pretty big sell-offs. If we wanted to see, I mean, there are going to be some years that didn't sell off, though. Let's click up top. Let's go right back to it. This is where this does get interesting if I just look at the yearly plus the average. So you got our average here, but do we see any that went up over that time frame? Well, this one kind of dipped early this year. We've got the legend up top here. We had another year in here where we went up through September a little bit further. This was all the way up through September. The vast majority are down, as you can see, the vast majority. But that purple year, 2017, we ran up all the way to the end of the year. We did not pause. That's kind of like our bull flag taking out highs, potential bull flag taking out highs and running up higher to the end of the year. The S&P, if it's like a 2017. Okay, this year I do want to state, I mean, obviously it's a presidential election year. So we can look back at kind of some of those years too, to just kind of get a general sense of what was happening. This red, it's one of these two, it's right here. So 2020, you've got 2020 was an election year, right? And that looks to be in the lighter red. Gosh, if your eyes can pick up on that, they're sharper than mine, but I think that may be I think it's this one. So this is what 2020 showed. We're set for maybe a crazy election cycle again, presidentially speaking. This is what we saw. We saw an early dip, but kind of like from where we're at now, it kind of ran up a little bit in September, mid-September, and then went down to close to a double bottom test before it rallied to the end of the year to a degree. Okay. So that's a consideration, just doing comparable years. 2016 was in green. That was the prior one to that. 2016, it's really hard to see. We can always just pull back the chart and just take a look at 2016. That's our green line right here. Well, we got that's the black line. We got a few different ones. It looks though these two lines are kind of the same. It looks like we did have a standard kind of a pullback in 2016, and then a rally toward the end of the year. So that is that. We've got sort of that overhang, right, of seasonality on us. Specifically, I'll just go back to it one last time, just so you can see it. But there it is right there. That is the average tendency right there. All right. So looking at this on a 30-minute chart, really helpful too to kind of get a sense of, remember we said that 50% level of the prior bar and the 50% fib. This is the level if we really wanted to make it easier to see in more minute range, it's that level right there. So that's your 50% level from the high to the low. If we can clear that, potentially a higher probability that some traders would look at in terms of getting above this level here. Okay. All right. Now, that's that. We just went through 5 of these plus volume profile and on-balance volume. Quite a bit to look at. We've got some things in our favor. I'd say more in terms of breadth and volume look positive, advancers, decliners, but then seasonality, we're right there. The trend looks okay and volume looks strong, but volume tells us when things get weak, to kind of recap and summarize there. Okay, if we were to look at the yield curve real quick, so I'm going to look at the /10Y, and I will put this into the chat, so you don't need to write this in if you don't want to, but the 10 the 2YY minus the 2YY, the 10-year minus the 2-year. And you can see over here, let's just, I mentioned I put that in. Let's just do that right now. That right there, folks. Does anybody use this? I'm just curious if you guys are looking at the yield curve. The yield curve has a tendency, once it uninverts, historically to trigger a recessionary time frame. We've got to talk about it because it's just like we're right there. We don't know if that'll happen. A lot of times, what the Fed's looking at right now is a soft landing, but historically, that's what this has shown us. I don't know if you guys use that. Right, you got it though, Raleigh. Yep, it's the yield curve. A cool place to look at this too is right over here in Fred, the analytics. In fact, let's go into it's the economic data right here. Before I get into that, let me just go to the home page and just mention to you down here at the bottom. This product here uses Fred API, but is not endorsed or certified by the Federal Reserve Bank, nor is the Federal Reserve Bank, tied into anything that Schwab presents specifically. There's obviously that there. I just want to make that quick disclosure to everybody. And as we go into this, and let me just show it to you here because you can actually pull it up, and it does show the recessionary periods. There it is, the 10. And just type in that. It's just the 10, the T10Y 2Y is what it is. And this is what we're looking at here. Oh, I guess it didn't. Yeah, it did. Oh, we're just slightly back below. We really haven't uninverted yet. I'm going to zoom back. These levels here are recessionary timeframes. You'll notice that once we go below, in other words, the longer term yield curve, the longer term interest rates pay less than the shorter term. The short term exceeds the longer term rates. You'll go below zero here. But once you uninvert and that flips back, it can be recessionary. And these are all the times that it flipped back. And there was a recession that followed once you got back up above that zero line. Everybody see that? You dip below zero. Once you uninverted, got back up above zero, there you were. We're very, very close to doing that. I just kind of pointed that out right now. It looked like from the first chart I put in, we were slightly above it. You really have to kind of zoom in. It looks like we are. Yeah. I mean, let's see, no, those are negatives still. I'm sorry, those are negative numbers. That's a negative. It's just 0.03. So there you have it. We have not done that yet. We've been down for quite some time. But anyways, one thing to kind of keep an eye on there for those of you that do use that. Okay, Mike, how do you find it's uninverted using this chart? Oh, going above the zero line, Thea. So uninversion just means, you're heading back up above zero right here. And once you do that, historically, yes, there has been a recession that can pop up. Okay. Just reading through the chats here and seeing what we've got. But I think we're good. Yeah, so just a final note, though. Yeah, the Federal Reserve Bank of St. Louis does not sponsor or endorse and is not affiliated with Schwab. Wanted to bring that up since we go into that point. But that's right there available to you to take a look at. There's a lot of great data in there, too. You can pull up on an economic scale as well. But there you have it. See, this one to me, at least in the way I'm drawing it, looks like we're above it. But the Fred data shows that we're still below it. I would actually trust this data because I think it's more accurate. So I think we did uninvert. Now, have we rallied up on that uninversion? No. And the Fed is trying to create a soft landing in the economy. So slower growth is what they're trying to get with a soft landing as inflation rates are dipping back down too, so that there is not a recession is the idea here. Okay. So I wanted to hit that. Now, let's go over here and take a look at the market forecast as well. I'm going to zoom into this and we'll maximize this. And actually, we're just going to go back to the S&P 500 index. We're just looking at one line here and we'll dive into it. But yeah, you know what? We're not below the 80 line. So really, the market forecast, we're just using the intermediate term line only. I for short. You can take a look at this again. If you're above 20 and pointing higher, then the market forecast can give you, one way to look at it is it gives you the okay. It says, hey, the market conditions are okay. They're positive to maybe add positions to the market. If you're below the 80, it says, and pointing lower, then You do not do that. You do not look to, it does not give you that signal to add positions. In fact, there's potential weakness in the market. In addition, if you are above 80, it doesn't matter the direction of the line, it's still, according to how many traders use it, bullish. But this is how some traders will use it. Uh, so, like I said, one day down will not impact that too much. A couple more questions coming through. Can you talk about the SOM curve? I don't know about that curve, but I'm happy to take a look at it next week. SAHM. It does not ring a bell. Okay. Yeah, speak truth. Transitory recession. Yeah, where is that? I've heard that before. That rings. Now that does ring a bell. Speaking of that, um, it wasn't too transitory. It still was an issue, no doubt about it. Just looking at a few indications. Now, one of the last things we do like to look at here is the crossover on the S&P 500 index. You can see over here on a weekly basis is how we use this. We we bounced off this level as we came down. So it's showing kind of like what you would expect in a sideways range. It's not really trending just yet. In fact, anytime you're getting kind of a closer, kind of a range of highs and lows, which we have over here, well, your main MACD line is going to go a little bit more sideways. And that's just going to mean there's going to be a lot of choppiness, a lot of head fakes, a lot of fake outs as, prices are going sideways on a weekly basis. The trigger occurs here when the trend resumes and prices get above, I should say, you're getting a move here. It's higher. I notice a lot of times you can get a trend breakout right there above some highs. At the same time, you're getting an indication of the main MACD line or the value line. That's our blue line that's breaking above the 9-period average. And I'm just using the defaults here, which I think are really interesting. Notice down here as well, when you started to come off the bottom and make short-term new highs right there, you also got an indication right there as well. And how did we do? We held up pretty well. That basically gave us a bullish indication in the market to the plus side. We held above this level. In fact, we bounced off it right there, and we continued on higher. By the way, final thing here on the market itself. If I'm looking at the market, a tool that we looked at actually yesterday in one of the classes I taught, we were using actually what's really common. In fact, if you add a moving average in here, you guys, so let's just type a moving average. What is the default? It is a 50. Oh, I think I saved that on accident. Okay, it's coming back to haunt me. It's actually a 9. If you do it on yours and you haven't saved any defaults, it's a 9. In fact, I'm going to save that as a default now because that's what it is. It's a 9-period moving average. If we compare that with the 21, this is more of a shorter term approach that traders will use as they look at it. I've got to make sure they're showing those studies. And I think we've got blue and black, what I normally will use. I'm going to save these though. Yeah, we do. Okay, cool. So there you go. So this is kind of an indicator that the crossover will tend to, in a number of different conditions in the market, the 921 is interesting for sort of the daily chart, sort of this range where you're breaking above a high, you're making a new high over here. The trend is breaking above a level, and you're getting a crossover right there, which comes in right at that point in time. And a lot of times these crossovers, we can pull up a number of different stocks, but you kind of got to bounce here. It kind of kept us in this trade, so to speak. You see that? And so where are we here? Have we gotten the crossover yet? No, we haven't. And we might not get a crossover until we break above this trend line, or excuse me, this resistance level up top here. But even here as well, the crossover occurred. In other words, the 9 outpaced the 21, and it simultaneously gave us a sense that prices might be going higher because we broke out above some highs. And then the general slope of the trend itself was enough to keep the blue line above the black line. And so these can be very interesting areas to watch for prices through this whole range because, we didn't cross below there. But I think the 9 and 21 can be of use to us for a number of different charts as we look at it. There's one on Visa over here. Visa, one that is showing some strength recently. It did have a crossover here. It broke above this high. It is extending higher, and you can see the run over here. So I just was going to leave you with that. That might be one that we can look at going forward on a number of different stocks or whatever the case is. I can put this link down here. I did one of these think scripts so that everybody could utilize this if you want to. I've got a MACD crossover. I've got a golden cross as well. If you don't have that MACD crossover, I can provide you with this one right now, and I can put the other one in the chat. Actually, I'll just do it real quick. I'll put this one in just so you have it. I'll include this at the end too, since I showed it here. And then I'm going to add one more, which was I might just take that one out for now. Golden cross. It's just the 921 crossover right there. Okay. And the 921 right here. We don't have any in that group, but if you were to go to the S&P 500, you could see some, right? There's the 100. Anyhow, there it is. I'll put it in right now so you have it, folks, and we are all set. Okay. So I'll put that in the chat. Folks, hopefully you found that useful. Bottom right-hand corner of the screen, be sure and hit that subscribe button. If you like today's presentation, smash that like button as well. Look forward to future presentations with you all. Hope you have a great rest of the day. Look forward to future discussions. See y'all.